Your title is too long to fit in the screen. Good. Welcome back, everybody. This is Created Work, our weekly series where we look at how builders and creators can leverage Web3 to build better businesses. I'm joined by my friends here, Abhinav and Arnold. As usual, we usually do have a guest on here, by the way. So if you would like to be a guest of the show at some point in the future, you're working on a Web3 project, by all means, drop us a DM or an email. Or head over to our website, createdeconomy.com. There's a guest list form there that you can apply through. But today we were going to be talking about the bear market, or sort of the new realities of the market as we are in them today. And we wanted to, also do a little bit of a catch up on where things have been going, how the show has been going, what we've been learning. So I'm going to kick it off real quick. I sort of proposed this topic because, I think, like, for example, I know personally, I had to scrap a whole bunch of plans that I was making around how we might, spend our time or deploy NFTs as part of our launch. And, we've thrown a lot of those plans out, and I'm happy to share those plans and actually discuss them with everyone here as well. Hey, Francine, how are you?
Oh, I'm great. Thank you.
So this week we're just catching up, and we're doing a little talk about the bear market and sort of some of the changes that
I think that's a great idea. I hope that would be what we were doing, because a lot of things have changed since we started. And I think we have a lot to offer people because we've been through all this, but we have to make sure that we give the right advice. It's not just encourage everybody.
Absolutely. So there's some reality to be dealt here. I will be right back in 1 second. I'm just going to check on a call, but I'll let you guys jump into the convo while I'm out.
Okay, I'm good.
No, maybe Francine, we can start. Can you maybe share some of the things that you've seen that have kind of started to shift with this bear market?
Well, for one thing, I don't see a lot of NFTs being sold. It's much more difficult to sell an NFT. So if you were thinking of using an NFT, to fund your company, I think you're going to have, it's like the end of ICOs. You're going to have much more difficulty doing it than you would have, say, 6 months ago, because number one, the market's overloaded. Number two, there are many more blockchains that people are minting on. And, number three, there's a lot more noise in the system about whether NFTs are actually of any use. Now, I think they still are. I don't have any. It's a good thing we don't have a guest. Sam, lay down. Sam, lay down. Yeah.
So I am curious, maybe to unpack that, a piece of that a little bit more, Francine. So I've actually wondered, is it the bear market that's kind of slowed down the pace of NFT, or is it just the fact that there was so much hype around it? It's so much, there's so many more NFTs now. Everybody's kind of launching their own NFT collections now. Is it just so saturated that that's actually contributed more to the slowdown?
Well, I think it's both. People don't undertake. I mean, look at Bitcoin. Truthfully, I've cashed out of Bitcoin for now. I assume it's going to go down a little bit more. I have a lot of experience, and and people in a bear market are frightened. And this is more than just a bear market. It's a bear market with COVID and an election, and and a war. So
sort of a perfect storm.
It is the perfect storm. It's the perfect storm for, as bad let's call it a correction, as I've seen in a long time. And that it won't stop Web3, but it will set it back. And it's going to, go ahead.
I'm sorry. No, I was curious when you say set it back, though. I wonder if it's set it back, or if this is just kind of shaking out the noise, right? And maybe we're getting more to a point of, and I think you were kind of getting to this or alluding to this earlier, where maybe more I guess more of the true value of like NFTs and other, like, maybe we can start to explore some of that stuff more now once we shake out the noise in this current period.
Well, I don't know. I've been very heavily into Metablocks, which is a metaverse platform based on land in existing cities. And they are minting and launched San Francisco yesterday. And we reserved our blocks months and months ago. And I'm not sure a lot of people are minting. I did, of course, because I'm a fool. But a lot of people didn't mint their blocks, even though they had reserved them, even though they'd played all the games to get up higher on the list, and all of that kind of stuff. So, okay, in my general knowledge from time on the planet, people draw back. Now, one thing about Web3 is it's mostly very young people. It's not like, major institutions. So, okay, young people, a lot of them don't even know what a recession is. They don't even know what a bear market is, But on the other hand, when Bitcoin crashed, I'm going to say now maybe 2 weeks ago, a lot of 8 people committed suicide. So crypto investors have had a huge lesson, and they've had a huge shakeout. And Web3, for better or for worse, is aligned with crypto.
No, 100%. And even, I think the other sort of elephant in the room, the sort of Terra Luna debacle, right? I'm sure that has further.
Oh, well, that was, to my mind, and I mean, this might just be because I'm old, but whoever thought a stable coin would be stable? I mean, it's just crazy. And even my roommate was like, well, I think I'll get out into, a stable coin. I'm like, a stable coin is like being a little bit pregnant. Either you're in or you're out. If you want to be safe, you are out of crypto right now. And if you want to be, and if you, and putting it in stable coins is not going to help. And the people who put it in stable coins, they largely did that because they did another thing that traditionally isn't done. They borrowed against a risky investment. And so that's what they use those stable coins for. So I feel like that was a lesson even I could have predicted.
Would you think that there is a difference in sentiment between mainstream, let's say mainstream people, Web2 people, looking at crypto and Web3 people looking at the space? Do you think that there is a difference in the way they're saying, how am I going to act here? Because
if you don't have money, there's no difference.
Yeah, absolutely. But I guess if you look at it so I can only have my view, right? My view is I'm in the space, so I can I can be empathetic. But my view of the space is there's so much intellectual capital coming in. There's so many smart people. All of the major organizations are saying, okay, we get it now. We're going to play ball. When that's happening, this is a market correction and on a broader scale. And crypto is a more volatile asset, right? So whatever happens here, it's going to be even worse. It's going to be even scarier. So it's really kind of like, my view is that, if we believe in the long term, it's, do you have any triggers in the short term, like liquidity triggers, any margin causes, something that's forcing you to act? And if that's not the case, you just kind of batten down the hatches and as a builder, you just build, right? And
Totally.
Yeah.
That totally. I mean, some of the best building gets done during downturns because you're not distracted by, the FOMO of investing in these NFTs that you think you're going to flip. I mean, I think the thing of flipping NFTs, people had a big lesson in that. I think it's the big boys are still not flipping. They never were flipping NFTs. They just keep rolling them out. Proof Collective isn't going anywhere. Bay Area Yacht Club isn't going anywhere. I mean, their tokens and their coins have gone down, but the people themselves have money, and they were investigating this market like I was, and so they have the opportunity to. Although they were big players, and I was, a little ant, but they're not going to starve if Web3 goes away. The people who, the people who, I'm not going to say are going to starve, but a lot of the young people and the artists, some of them are going to have to get jobs. A lot of them were thinking they would never have to work.
Yeah, it's an interesting dynamic of the space, especially the NFT space, because the price of the NFT is primarily discussed in the currency or that they're based on. I think mentally it's a slightly different thing than if you're investing in coins, because a 1 ETH NFT continues to be a 1 ETH NFT. A 1 Sol NFT continues to be a 1 Sol NFT. So whilst the market might be doing this, you mentally can kind of stay here, and it's not as distressing. You're not seeing your asset fall, even though the underlying thing is going up and down.
But if you're an old dog and you understand that the dollar is at its strongest, why would you take the roller coaster ride with Sol right now or ETH, on an NFT when you can put it in good old American cash? Now I'm an older person, and I think the young people with all the intellectual, capital that you're talking about are definitely the future, and they need to keep going and build. But I don't want them to kill themselves. I want them to put themselves in, and the ones who are creators. I mean, is Greg talking to us? Or?
No, he's distracted.
I see. Okay. So, for instance, the thing that's in trouble is the creator economy. Okay. I have a wonderful creator friend who I met on Clubhouse. And at the beginning of the creator economy boom, she was a diversity consultant, and she had a pretty good diversity consulting practice. But two things happened to her. And I mean, this is a 40-year-old woman. This is no dope, two things happened to her. First of all, everybody became a diversity consultant because that got trendy. And then she wanted to become a creator in order to differentiate herself with a special kind of diversity consulting. And she could not understand why she couldn't get support for her diversity for her particular brand of humor in diversity consulting. And so she ignored getting contracts, and she ignored getting a job. Well, she's now at the point where she's a 40-year-old. She's bitter and disappointed because the creator economy has not paid off for her at all. Not at all, and she doesn't have Wi-Fi or cable anymore, and she's having to get on Clubhouse and do fundraisers to, pay her expenses. I mean, this is what I don't want to happen to creators during this bear market.
Yeah, it was interesting. Talking about the creator economy and kind of how that intersects with Web3. There was Underscene Horowitz report that came out, the state of crypto in 2022, and one of the interesting facts they quoted was the amount of money that's been paid out to creators, NFT creators, and maybe I'm not exactly on, for the past year was around $4 billion. The amount paid out by Spotify was about 7 billion, and YouTube was about 15 billion. So if you look at the number of people that's divided across, Web3 has done such a great job in those creators getting paid, that with this downturn, there's definitely going to be, that's no longer, I guess it's there to a certain degree, but that's definitely being brought back a little bit.
Yeah, exactly. I mean, the creator economy took off like wildfire, and everybody decided they were going to be a creator, and nobody wanted to get a job. And and if you find your audience, that's great, but sometimes it takes years to find your audience, and sometimes it's like a startup. You have to keep the company going and maximize your runway, until there's a way for you to get paid.
Well, I mean, I think it kind of circles back to a conversation that we've had many times, where you have to treat it like a business to some degree, right? And you have to think about that burn. And
totally a business. Yes. And see, that's where terms like creator economy, and I love it. I mean, I think it's wonderful, and I'm up to my earlobes in unsaleable NFTs for women-owned projects that may never make it. I wanted to support them. I still want to support them, but I've spent 25 years coaching startups, and I see where these things, the rubber meets the road inevitably. Like I'm a big Clubhouse, I don't know what you want to call it, maven user, power user. And so I had a talk with Paul 2 Fridays ago, and it took me a long time to get it. And I had to kind of piss him off before he would even have an appointment with me. I was like, Paul, you're over 2 years old as a company, and I am an investor, admittedly a very small investor, but I am an investor, and there's been absolutely no investor relations. What exactly are you doing about that? And so I made him feel, I guess, guilty, or I don't know, something, but he set up a Zoom call with me. And the first thing I asked him on that Zoom call, because it happened after the crash, the first thing I asked him was, how much runway do we have? For Clubhouse, because I know that they raised $100 million, but I don't know, when you have 95 employees, I don't know how long $100 million lasts. And if you're, because I have no idea, I have no transparency into his P&L or his balance sheet or anything, into any of his financials. So my fear was that you're not going to be able to raise now unless you want to do a down round, because that's where the VCs are at. The VCs are sitting with companies that they've all decided are unicorns, that now are not going to be able to advance the way when they were invested in, everyone thought they were going to advance. So now the VCs have to keep their powder dry, and try to see who make some decisions. Who are we going to keep alive?
And from my understanding, there's definitely plenty of powder, right? There's plenty of funds to be deployed, but there's a big narrative of like, don't expect to be raising easy money, which is a little bit self-serving, right? There's a lot of like kind of let's explain.
Self-serving, Abhinav, is a nice way to put it. It's bullshit because they were the ones who inflated the values. They were the ones who threw money at these founders. When you throw money at a founder, guess what? He/she is going to find a way to use it. And the way that they are going to use it may not be the way they would be developing the business if they had less money. And the reason for that is that when you throw money at a founder, it is, a signal that you want them to scale. And so they try desperately to scale. Even if they can't support the scale, they have no real business model. And some of these Web3 projects don't. I mean, I'm putting out an NFT and it's going to help marginalized women business owners. Okay, help them do what? And after the money from the minting of the NFT is over, where are you going to get the money to continue helping these marginalized business owners? Is it going to be a continual parade of NFTs? And what if your audience refuses to buy them? There's so many questions that the people who are working on these NFT projects don't answer. Oh, we're going to have we're going to raise the money and we're going to build a game, right? And, what if nobody plays the game? What if nobody likes the game? The game industry, of course, can be very lucrative, but you can also lose your shirt and go out of business.
You're getting a lot of attention there. Someone's jealous.
Totally. Well, wait till you see this. I can't get her into the frame.
Oh, it's a party.
Yeah.
Oh, here we go.
See, I don't usually do this outside. My cleaning woman is here, though.
Why not? You touch on a great point around the inefficiency of free cash flows, right? That's kind of a known business paradigm that the more free cash flow there is, the more inefficiently it's spent. And I think in Web3, with the hype, there has been so much of it. And so therefore, people have been able to move forward without, fully formulated plans or clear product market fit. So, there is what Arno mentioned, there is this downturn could well tighten that up a little bit. So some of the projects that are going to come
Well, it does. Every cycle tightens it up a little bit in that companies fail, because oh gosh. I don't, at some point, can you still see me?
Yeah.
Because I can't see you anymore. A dog has pressed the button. Okay, I'm back. Down. Maggie, down. Okay. Well, let's take the year 2000, okay? And there was this company called pets.com. And the whole goal of pets.com was to deliver pet food over the internet. You could order it and it would come to your house. And the pets.com thought, the research they did said, well, this is going to be a great business because everybody loves their pets. Everybody loves convenience. So we're going to be able to sell pet food over the internet. Well, they basically flamed out during the dot-com bust because they had forgotten that in order to have that kind of service, you have to have the logistics set up for it. And even though they had the online commerce and they had, a lot of, they didn't have the logistics in place. Well, it's 20 years later, and PetSmart now has a website called Chewy.com. Chewy does exactly the same thing Pets.com did, and it's unbelievably successful. Why? Because e-commerce technology has come along. Because anyway, not to belabor the fact, but some of these good ideas will remain good ideas, but the horizon, the runway, for things to happen is way longer. And during a bear market, it gets even longer than that. I mean,
Yeah, we've been so for your feed, we're launching through an NFT collection, which is going to bring you benefits on the platform, kind of different features. And some of the conversations we've been having around is supply, right? So whereas previously the baseline was starting point was 10,000, it's like, no, now what is the norm? So we're watching other projects. How many projects? The majority of projects I see on, we're looking at Solana, they're looking at 1,000, maybe 2,000. It's really in that ballpark, really. So I think that's visibly changed, right, in the last month or so, that people have gone, okay, well, how much money is actually out there, interested money, and even my project might be great, but how much is free and moving and available? I think it's different for Ethereum and Solana. I think Solana has a lower access point, so there's some more accessibility even in a downturn. But definitely, the amount of capital, and anyone that has to come in perhaps might get a good deal, but anyone who's a crypto native is kind of is experiencing that downturn.
Right. And what was just looking for is to see how much Metaverse, Metablocks' whitelist minted yesterday, and it's such a good project, but I'm thinking I'm looking to see what percentage minted out yesterday off the whitelist.
There's definitely, like, now you've got good tools like pre-mint and Mint Party, and there's other ones on Solana like Blocksmiths. There are people who are very much keen on, okay, well, I got your interest, now carrying you through to the actual mint, and there's definitely, that's a key metric of fall off, right? And now
Right.
It's even more important, because during the time from that first communication of, hey, it's what we're doing, to like, okay, can you press go now? There's been a lot that's changed.
Yeah, and I wonder what the percentage is of people who are involved in these communities, and they were just throwing money at them. And I have a lot of unanswered questions in my mind, because when you're a crypto native and you have an account that's got a bunch of crypto in it on Coinbase or wherever it is, and you have a lot of ETH hanging around or something like that, it doesn't feel like real money. And so it's very easy to switch it to the Polygon blockchain, or you switch it to Matic and mint Metablocks, and not think of it as real money, because maybe you've made money in the past and you have it. So, but maybe you didn't. Maybe you're not, maybe you were a little late to the game. So those are the questions I can't answer. How many people look at their ETH portfolios like I did when I first started fooling around with Web3? I was like, well, I might as well buy some NFTs, because what the hell else am I going to do with all this ETH? Well, a year later, or a little bit more than a year later, it's gone. I don't have that problem. I don't have that problem anymore. It's let's say it nicely. It's deployed.
It's still doing something for, some good out there somewhere, Francine. So.
Yeah, but it's not part of my balance sheet anymore, because I don't know what any of these NFTs are worth. And ETH itself, went up to 4,000, which is 3,000 to 4,000 is where I bought most of these NFTs. Some percentage that I didn't have the patience to figure out was totally lost in gas fees. And now ETH is 1,900.
Yeah. Yeah.
And
Yeah. I guess if you're sort of in for the long haul, as long as you don't look at the dollar number next to the ETH number, you're okay, right? It's that measurement back to fiat that is changing significantly. So if you believe the market is there in the long term and the fundamentals are there, as long as you're not forced to exit or liquidate, you're okay.
Right. If you did what you were supposed to do, which was only invest what you could afford to lose, then you can just put it on a back burner and sit on it. I did that since 2013.
Yeah.
That's what, and depending on your investment strategy too, or where you're looking to do, this could arguably be the right time to start accumulating some of these.
Well, and that is what I think. If you're in it for the long term, I'm in a different position. I don't really have a long term. I am the age I am, and I'm not a long term investor anymore. Which is why I don't know why the hell I was, investing in startups in the form of NFTs anyway, because I know these are, 5 to 7 year horizons.
Because it's fun.
It was so much fun, and the FOMO was so high.
You don't get this excitement buying bonds, Francine.
No, and of course not. And I've never been the type of person who would. The only lucky thing for me is that I've been through so many downturns. They're 5 to 7 year cycles. And if you think you're going to get up tomorrow morning and anything is going to be different than it is today, you have another thing coming. It's going to be like this for a long time. And if you're me and you're invested in crypto, I just don't open it anymore. I got everything off of Coinbase, and I have another place where I keep Bitcoin and ETH, and that's Kraken. And I never open the Kraken window. Never.
Just don't look.
I don't, because that really is, it's going to come back up sometime. If it's not in my lifetime, my children will love it. But why should I make myself sick? The people who leveraged their Bitcoin to buy the everyday things they needed in life, and got those margin calls, man, those are the ones who committed suicide because they were spending their family's money. And a lot of people did that because they were so encouraged to do it by all the hype, get in. So they got in. And if you haven't been through some of these, you're going to get hurt the first time around. You just are.
Yeah, the normal principles of invest what you can afford, and it's a highly volatile asset. You got to do your own research and be sensible. They all apply, and these kind of markets kind of make it hurt when you don't follow them. And if you're leveraged, then anything that could be margin called or pulled in, it can be catastrophic for you. Which is I think what happened with a lot of people with Luna and Terra. They were looking at. That's a stable coin. It was an algorithmic stable coin. It wasn't really a stable coin. And they were like, oh, these returns this is technically a bond, right? And no, well, it's not.
Exactly.
And that's come
That's
back.
why I feel scared about staking coins too, because it means you can't get out. You can't use them. You can't get out. You're in a liquidity pool. Maggie,
Speaking of can't get out.
Maggie, down.
Nice. What did you say about staking?
Yeah.
Exactly.
I heard steak. That's all I heard.
Yeah, that's all she heard. Right.
It's interesting because we're building on Solana. There is a sort of ETH and Solana dynamic. I think Solana does seem to be having, especially some of the NFTs, having a few stellar performances even during this sort of bear market. I mean,
No,
okay,
I agree.
yeah. OK Bears was kind of at the start, and that was a pretty exceptional project. I think the great thing with something like OK Bears, it's they minted at I think 2 Sol, which is like a couple of $100, and people who invested at that time have made 100x. And it's not representative of all projects, but it was very accessible. It's done a great job, and it's sticking around. There'll be some other ones. There's Tripping Apes, which I think is minting today. They've got like almost 400,000 Twitter followers, which is huge for a new project that hasn't minted. But something like that doing well is kind of great for the ecosystem, but it's also going to suck up a lot of liquidity of the people that had money to spend. So it's interesting.
I'm curious, like any ideas why like those particular projects are able to be successful in this current climate where others are just can't?
My understanding, and I haven't internalized and accepted this understanding yet, but my understanding is because of the branding, is that because the guys and girls have done a great job of making it clear that this is very clear, well thought through IP. All of the branding of the characters matches. There's a lot of detail. So, they're really kind of going in with the storytelling angle, and that these are characters that have had a lot of thought. Tripping Apes is kind of, I think it taps into sort of the underground psyche.
The ape fest.
Yeah. Yeah. And it's in the ape family. So that's kind of probably helps as well. But yeah, branding, I think branding and good community engagement would be the key. But yeah, I don't think that that's the only answer. I think there's probably more stuff under the hood that we don't see.
Well, that's right. And see, the amount of branding that you have to do to mint something like that, is huge. I mean, you have to have a lot of money and time to develop all the ancillary marketing materials to do something that's so successful. That's why Proof Collective is so successful, and consumer packaged goods, that consumer packaged goods may be a real community play. I'm trying to keep the dogs out of the picture. I don't think that Greg is going to want to release this.
It's already out.
Yeah, we're live, Francine. There's no going back.
Oh, that's right, live. Maggie, lay down. Do not make me look like a bad mother. So, so some of these people who have real branding experience, like the consumer packaged goods guys, they ran a consumer packaged goods room on Clubhouse. They're in the consumer packaged goods industry. They understand how wide scale branding is done, and they flipped it over to a Discord and became crypto packaged goods. And they brought the same branding experience, which is consumer branding experience, and the same community building experience to that. Yeah. So that's why that went well. Proof Collective went well because of the scarcity thing and Kevin Rose's personality.
Yeah, the community dynamic, I think I've started to understand more recently as well. Especially looking at some of the free mints, where people are giving away the NFTs and then kind of saying, okay, well, there's royalties, so we'll make money on the tail end. And every time
only if they sell.
Only, well, these are free mints. So yes, but the weird dynamic of the space is that the whole collection is judged by the floor price. So if you don't have NFTs on the market and you just have one, and for some reason that's listed at 1 ETH, well, the floor price is 1 ETH. That means the whole collection is then valued on that basis. It's kind of an anomaly. It's not an average sales price. And so what people are doing with communities is they're really giving the community the belief that they're building something really good and creating tangible incentives, and whether it's a token or whatever, to say, if you stake this NFT or whatever, you hold it somehow, there are more benefits coming. And that community,
which turns out to be more NFTs.
It may well be, yeah. It might.
Well, it's collapsed. I'm in all these discords that I kind of look at once a week, and it's all these collabs. We're going to collab with XYZ and produce another NFT, or we're going to do an airdrop of so and so's NFT, and then they collaborate with each other. I am for collaboration. I think eventually that is going to work very well. I wish the world would do that. You know what I mean? It's like, it's a good strategy for living life, but for right now, it might not, be the best strategy to put food on the table. And I think a lot of people, and Arnold, you don't live in the United States. Abhinav, do you live in the United States?
I'm in the UK.
Okay.
Yeah, I'm actually in Chicago.
Oh, sorry, I had it backwards.
Yeah,
I had it backwards. But I think in the United States, people are going to have a lot of trouble. We are just in for, because we're in a civil war. We have the war in the Ukraine, and then we have our own little civil war around the elections, and all of this creates turmoil. And turmoil is never good for markets. I don't care what you're denominating them in, Yeah. I mean, we all thought, to be honest, crypto would be different. We really thought it would be a good inflation hedge, and we didn't think it would crash with the market. That was a surprise, even to the long-term, Bitcoin maxis. How closely it tracks with any other risky investment class was a shock, I think, that we've all learned through this downturn.
Yeah, I think one thing that surprised me that maybe should have been obvious was how every other crypto tracked so closely with Bitcoin. Like what Bitcoin does, literally every other coin, and does as well. So
yeah,
it's like the public markets.
It's interesting that the kind of that long-term view translates in crypto into memes, right? And it's like all the language around hodling and laser eyes, all of that stuff. It's kind of like in a fun, casual way trying to portray
diamond hands.
Yeah.
Diamond hands.
Yeah.
We've shaken out the paper hands. What's left are the diamond hands.
Yeah.
That's otherwise known as, if you're poor, you had to sell, and if you're rich, you can hodl.
Yeah. So it definitely is. If you can afford to hold, you'll make it out the other side. But if you have like you said, if you're slowly liquidating your Bitcoin to finance your lifestyle, well, right now that's under real pressure.
Right.
Yeah.
Exactly. And that's why I've always had two wallets, two exchanges, and kept some on one exchange and some on the hodls are on Kraken.
Okay.
Kraken's the one I've been on since 2013, and the hodls are on there. But the trading stuff was on Coinbase because it was so easy, and I just have bailed on that. I'm not going to trade in this market. I can't. I don't know how. I don't think anyone knows how. Because even Apecoin, Apecoin, very, very heavily supported by the ape community,
Yeah.
It's not worth anything.
Yeah, I guess that was really kind of the movements were centered around the sale, right? And it was the requirement to mint was in apes, so that really was kind of creating the demand for that.
Right, exactly. And I guess what happens is the people who, understand how money is, they get in, they mint the, they get the ape coin because they have an ape, they buy it, they hold it until the lockup period is over, and then they dump it. And that's what happened with the ape coin. I don't know if it'll ever come back, because why should it?
Yeah. Have you guys? Sorry, go on.
No, I was just going to sort of chime in. I mean, I think that could be the same story for a lot of the coins that are out there now. Why should it come back once we get past this downturn? Like, what's the real value or utility or whatever, with those coins, right?
And that is why the Bitcoin maxis always referred to altcoins as shit coins. And the theory is the shit coins are done for. Most of them, although some of them will. I think it's Celsius that's building a wireless network and has nodes that people use. There's some coins that have projects that are well underway.
But I think that gets back to what you were talking about earlier, even with regards to NFTs. The real work, right? The real, I'm going to use the word utility. I know it's a big word, but the real underlying engine of these projects, of these coins, those that have that real underlying engine will be fine, I think, in the long term. Those others that were truly just around hype and speculation, those will be the ones that taper off. Maybe they'll be replaced by new ones, but yeah.
But that's what it is. It's a startup culture, and it's just like any other startup culture. And from my perspective, it's good in the sense that it basically is future focused, and it is optimistic, and it is, a way to introduce new technologies and new ideas and new ways of looking at things. I really like it. For the long term, I really love it, because the whole idea of collaboration, the whole idea of direct monetization, these ideas are fabulous. It's just that they're not sustainable right now. They're going to take much longer. I mean, every day there's a different tool. Oh, look at that.
He finally gave up.
I hope he made some money while he dissed us. But yeah, no, he left and went to the gym.
Yeah, he made the call, and he was like, I might come back, and he's like, nah, I'm good.
I'm out.
Yeah. Exactly.
Talking about new models, obviously play to earn, use to earn are kind of, new to this space. There's some pretty established ones like Axie Infinity, plenty of other ones. Have you guys heard of Steppen?
Yes. Yeah. And I want to try it, but I've forgotten what you have to do to try it. There's some, because it gives you money for fitness.
Yeah, just getting out and walking around, right?
Dude, I could, like Medicare could save a bunch of money if it tried to encourage older people, to walk around for money.
Yeah. Well, I think scale, Francine, anybody, right? Like you get a reduction on your premium or something based at the end of the year, based on how many.
It should be the greatest, improvement in healthcare. So that is a project. I've investigated it, and I've wanted to become part of it. I think it's in private beta. I think you need an invitation.
You need a code, so you can download the app from the app stores.
I have the app, me.
Yeah, but the other interesting thing is that they make you commit by buying the NFT up front, and it's only similar to, I guess, Axie and all these ones, that you have to have the sneaker. And then the sneaker actually degrades with use, and there's lots of different levers. You can put jewels and different levels, But from the surface level, my understanding from speaking to people is people are making their investment back in about a month. So, whatever and I think the access price is quite high now. So it's probably like $1,000 to buy a sneaker. But within a month, you can make that $1,000 back. But then the next step is they go, okay, you've made some money now. Do you want to get a fancier sneaker that's going to earn you money faster, right? And so there's that gamification. But definitely it's because it's aligned with that. I would just want to run anyway. So maybe I'll make some money while I'm doing it. Here, I'll put some money down for it.
Well, and that's probably who's investing in it. Right. Exactly. I walk 10,000 steps a day anyway. So why don't I do Steppen?
Yeah.
Yeah. I have to find out what the floor price is, what it costs to buy in.
It's around $1,000, something like that. So it'll be about 20 sol.
Yep.
Yeah.
That's why I didn't do it.
Yeah. Yeah, but they launched their token, their governance token. So they did a sale on Binance's launchpad. I think it's probably around 10% of their total coin value. And maybe not this week, but a couple of weeks ago, they were trading at a $2 billion market cap. And the company's been out for probably for 60 days in the open, but they've got like 2 million users in 60 days, and that's incredible, right?
Oh yeah, I mean, trust me, that is a great idea.
Yeah. And to be able to do it now of all times, right? I think is also, that says a lot, right? To longevity and sustainability, right?
Well, it depends on how they execute going forward. If they don't keep their community engaged, then they don't. There's still a lot that could go wrong.
And so there was a article in TechCrunch with I think the founder who, I think they were asking, look, everyone's asking the question, is this sustainable? It's great now. People are making, $60, $100, $500 a day, but is it sustainable? And, his point was, well, we're doing a good thing now, right? Right now it's working. We're going to have to find ways to create values for people in the future. And from a business point of view, well, if I'm paying to acquire customers, I know that we can create value for those customers in the future. So I'm not worried, right? And I guess it's a fair point of view.
Yeah, I think so too. It's the thing I'm most curious about. I just wish I had gotten to it before it minted, before it was $1,000 to buy a sneaker.
Yeah.
So yeah. I wonder how much exercise you have to do for a week to make back your investment,
Yeah, I guess it's running every day for sure. I know people have been joking about, tying their smartwatch to their dogs and letting them do the exercise.
And you got two, Francine, so you can.
Oh my God, 2 dogs! I can make bank. Oh, that's so amazing.
So
I have 3 dogs, but I don't know how
we're gonna have to get you an access code, and that'll be our collective investment.
Oh, that's right.
There's a new business in there, like dog collars that can host like smartwatches. This is a whole.
See, here's the issue. The issue is you just mentioned, yeah, and it is funny and it's cute and all the rest of that, but you just hit the big, the big problem, which is how long will it take to gamify that? Not in the way the founders meant to gamify it, but in the way people tying it to their dogs, or whatever.
Yeah. They say that they have algorithmic checks. Oh, maybe that's wrong. Use the word algorithmic. They have checks to see, okay, how is the movement? Is it unnatural? Does it not match a human movement? So I'm sure they have some controls, and then there's limits around. So you only have a 10-minute earning window for one sneaker, right? So that in itself is such a big control factor.
What do you mean a 10-minute earning window?
So you have to activate your sneaker, and if let's say you have a baseline sneaker, that baseline sneaker without being upgraded gives you a 10-minute earning window. So you run really well in that 10-minute window, and you can make your maximum earning for the day. But you could go for a 30-minute run, but it's only counting 10 minutes for the run.
What if you walk?
There's we're getting into details now.
Yes.
There's different types of sneakers. So there's sneakers for walkers, joggers,
Oh,
runners, yeah, and they'll.
but they kind of work backwards, right? So if you've got the running sneaker, then you can walk, jog, or run. But if you've got just
no. So there's a sweet spot. You have to be in the sweet spot.
Ah, okay.
Yeah.
Okay.
Again, creates a need to buy different types of sneakers, because I've got one for walking, one for running, you know. One of the dogs runs really slowly, and the other one's a greyhound.
The other one's a greyhound. That's right. I was just thinking, we have a greyhound rescue in Phoenix. I could always use another dog.
We're hacking their platform live on air.
Yeah, exactly. These poor guys. Well, let them think of it as startup advice.
Yeah.
Because we're doing on air what, you know, someone is going to do to them. But I think I'm going to start reading about it. I'm not going to buy it just yet because but I so want to try it, and I so like the idea going forward. And interestingly enough, I am working on the launch of a walker product that for older people with disabilities that has artificial intelligence built in. And I was thinking that a product like this partnered with a product like that, you know, would be really interesting for the health insurance companies that want people to get out and exercise more.
Yeah.
I mean, see, that idea, which is a really good idea for getting, you know, people, elderly people to care more about their health, that kind of thing is maybe 15 years away, you know, but it's there.
Yeah.
It's there. If you've been around, you know, again, as long as I have, you've seen how long it takes. But look, we got telehealth. You know, all of these things happen. It's just that you have no idea how many companies go broke waiting for it to happen and being just slightly too early.
Yeah. Timing, right? Timing, survival.
And this is what I'm afraid is, you know, ahead for some of these really, really enthusiastic Web3 people projects. You know, they're just a little too early. They get caught in this downturn. Let's see. It started last time in 2000, the last, you know, tech bust, the .com bust. And it took about 4 or 5 years. And then we were in Web 2.
To kind of, maybe as we're getting to the end, kind of bring it to a positive note. And I think the people that do survive are, you know, let's say
are Amazon and eBay.
But if you survive in crypto and you come out of the other side, and, you know, and how you do that, you know, if it's by onboarding new users to crypto. Right now, if somebody's buying ETH, it's cheaper than it's been for a long time, right? So if somebody wanted to come in, now's when you come in. And
well, especially since they're going to go from proof of work to proof of stake. Yeah. And so the gas fees are going to go down. So all of this stuff is going to change.
Yeah. And as a project, if you generate X amount of ETH or SOL, when you get further down the road and the market normalizes, well, the fiat value of that then comes back to what the norm was, right? So if you just focus on the ecosystem that you're focusing on, bringing new users is kind of like the magic wand that, you know, if you can get new users, the ones that haven't suffered the crypto loss or are not experiencing that decrease in value, they're actually in for a gain with you. So that's probably the magic stick for somebody who is working in crypto right now.
Well, yes, because the pioneers are the people with arrows in their back. And that's us, you know. And the next people who come in after this downturn, you know, and presuming we all survive, they'll join us and they'll have such a great experience. you know, they'll have the experience that the Web 2 people had at the beginning of Web 2, when it was all bar camps and, you know, Twitter and Facebook were young and things were wonderful and nobody sold anybody's data. And, you know, the good old days.
Good old days. That is a great point to end on. So this is a really good conversation. I think it was, hopefully we discussed the pros and the cons of the bear market.
Right.
Yeah, for sure.
And I'm hoping that we gave some really good advice to Web3 founders who need to survive. And if they there's lots of things you can do. The easiest one is, you know, go to work somewhere else and keep this as a side hustle for a while. Seriously. A lot of founders do that during a downturn.
Yeah. Use all your opportunities. Yeah.
Use all your.
That's what we as founders do. Period. Right? It's, you know, you work the side things you need to work to keep the cash coming in, to keep those lights on.
Multiple revenue streams.
Yeah.
Multiple. That's what we should end on. Multiple revenue streams. Well, I have to say it's a pleasure talking to you guys. Usually Greg does a lot of the talking. So.
And we had the pups in too, right?
Oh yeah, the pups are always good. They have, of course, now gone to sleep. All right.
Amazing. So we're gonna wrap up the show. Thanks for everyone for tuning in. Thanks for Arnold and Francine. Great conversation, and thanks for Greg for not tuning in.
Can we even end this thing?
Yeah.
Okay, you got it.
Bye, guys.
Cool.
I know that I can't end it. I can go away, but I can't end it. I am the powerless woman.
Well, I'm right there with you, Francine, so you're not alone.